Hi there, coming to you from Traders Community. We're going to go through our Traders Talk, which is going through the week that was and the week ahead, what to expect. We got another busy week. It been a couple of very volatile, if not crazy weeks for many markets. It's some very wild moves. The focus this week is going to be on the Federal Reserve with its meeting, but also there's a deluge, and that's what we've titled this week's weekly, a deluge of central bankers. So we've got England, Japan, America, amongst others. Many have already come out. We had massive inflation numbers come out on Friday in the States, but it's not just in the US, it's also in China, other countries. We saw last week in Brazil, or was it the week before, another rate rise there. We also have all the talks about Apple hitting record highs there, almost a $3 trillion company. We also did a separate podcast going through the NovaWave and also with the options and how all that's set up. A lot of these things are kind of predictable if you want them to be, if you're very disciplined and looking through the market. And inflation, of course, is the major thing. We're going to go through the stock market aspect of the report, which includes, of course, index and futures trading. So last week, if you go back to, it was kind of like a classic V, but a very violent one on certain stocks. But it was also very particular of what went up. So the major stocks, and obviously Apple was the big leader there, kept getting a bid. It is tax year, tax season, tax selling season as opposed to filing your taxes. So we've had a lot of stocks that have broken down are being sold extra harder, and a lot of surprises there. Because really you don't know what people are selling and what they're not. We like to make suspicions, but in reality we seem to be overreacting to taper talk, virus talk, and interest rate movements in some respects. But in others, we're totally neglecting around risk. Again, inflation, the sheer heaviness of what's going on, and still many aspects of the economy very weak. Even though you'll see a Kramer I saw off CNBC, I read that he said it's the best economy he's ever seen. Well, I guess it probably is if you're entitled and living on Wall Street money, right? Anyway, S&P was up 3.8%, saw new record highs. I think the Dow did too, but up 4%. They were the biggies. I think at the start of the week we saw that the Dow had its biggest run in a very long time. The Nasdaq was also up 3.8%. Mid caps were up 2.9%. The small cap was up, however. There's a lot of talk of that being weak at certain aspects of it. And our friend Alex over there at Mayhem did a great report on that. So make sure you listen to his podcast. And he put out a series of charts on that. We saw again, so think of actually, before I say this, Apple is being seen as a safe haven bet. You know how that goes. So mind your risk. Transports is another one, up 2.7. And we can go through the rest of the semis, had another big week, 2.9%. But depends which semiconductor you're on, right? So be very particular on what you're on. Gold actually was down for the week, which is interesting. Gold stocks we're talking about here. Over in England, we had another strong week, and in Europe, everywhere was up. I think last week, Spain was down. This week it's up. The biggest mover was over there in France, followed by Italy. Now, some of these different countries you've got to, and I'm not going to sit here and pretend I know about them all, but do your research on what's going on there. Japan, South Korea and China, all around much the same, 1.5%. India was the leader there, up 1.9%. Australia had its first gain in 5 weeks. So Australia was hurt by kind of being late to the COVID party, for want of a better word, and then all the commodity selling from that, right? So iron ore came off hard, and a lot of these other aspects of China. So that's changed. It's had its first gain, as I said. It was up about 1.6%. There was a lot of domestic news there. The big one was the completion of the massive $22 billion merger between Santos, the gas company, and Oil Search from up there in Papua New Guinea. And iron ore was still down on the week, but it's over that $100, so $108. Over in the emerging nations, so what I noticed, interestingly, the week before, the emerging indexes were up, most of them, despite the sell-offs in the US and other countries, in particular the US zone. Brazil was up 2.6%. Russia was up 3.9%. Again, much to do with oil. Mexico was up just at 1.2%. The big gain again, and this is again the total wipeout of the lira over there. So again, a valuation of assets. We'll have a quick look at that chart before we close up tonight. But that was up 6.7%. It's now up nearly 40% for the year. Bear in mind, though, if you invested in the currencies, not so golden. Okay, the biggest winners here were again some of the ones that were the biggest losers. So we have Broadcom was earnings. Duo, I think that's how you say it. That was a Chinese company coming back. Apple wasn't even the biggest winner there. So there you have it. Obviously was in terms of valuation and actually popped the biggest on two indices because it's in the Dow, it's in the S&P, it's in the Nasdaq. The worst was Peloton. Been a dreadful run for that. A good example, I would say, of tax selling. Just general disappointment. And we had others in there. Avis was another one. Even though that wasn't an IPO, it was kind of secondary listing from OTC to one of the, to the Nasdaq, or was it the NYSE? But I've seen a lot of these IPOs just destroyed. Some of them that just came on. One comes to mind was LITM, the lithium. Some of the EV players, amongst others. Great examples, I would think, of tax selling. Southwest Air was off. That's a lot to do with the reopening. Are we unopening? Travel coming off. A lot to do with England with that. So let's look at the biggest in healthcare. I'm just going to mention a few of them so we get the general gist. But TRPH was up 28%. LHCG up 19%, and we can go through them. Anything else really stand out? We've got a cover here of we're covering the consumer discretionary, industrials, and you can get these from. There's a lot of good sources out there. The FinViv, different Reuters, Briefings, another one we like. Lots of good sources out there that are free information, and also worth getting the subscription. If you need that, if you don't have, we're fortunate enough to have the access to Reuters and Bloomberg and stuff. But go through those. The biggest losers, something with healthcare, and it can be violent, right? With biotechs, even with the vaccine companies. Is this past? Are we going to do this? But biotechs can be a lot to do with finding a FDA approval, finding a cancer cure, but then needing money to fund it, secondaries, etc. So they are very volatile. If you do trade them, be aware of that, and I would not suggest putting all your money on red in that one. The gold miners are in there as well. You can see consumer discretionary. Energy, SWN was one of the winners. That's Southwestern. It's got a lot going on there in the acquisition field in natural gas. P10, another one that's a I think it may well be the biggest land-based driller now. I know Rig or Transocean is the biggest offshore driller in the world. Both Houston companies, so I should know exactly that. So have a look through them. Let's go through the actual markets and the charts. On the S&P, which is the main focus here, looking at the charts here from NovaWave. So this is a daily. Remember last Friday, and it turned out that we were lucky enough to be right. But remember, look at support and resistance and why. So this had held the median line. It's a very powerful tool. And I'm going to add in a friend on Twitter here. I think is one of the best at it, Giuseppe over there in Italy. He's kind of a doyen on this, but it's a great tool. We came to it through studying Babson and stuff. So basically everything spins around zero. Is your premise here, stays in a trend. And so you want to be, everything we use is time and price. You want to be latent, you want to minimize your risk and maximize your opportunity. We came down off perfectly, if you recall, a spit of 8/8. It held this level. We went out Friday. Our risk was limited in theory, unless there's always something out there, a black swan, and we have wars going on and a lot of unhappy people in the world with the virus and the inflation. So keep that in mind. Just the percentage that trade stock markets and live with bank money isn't the real world, right? Main Street versus that. So keep that in mind. Anyway, we had ABC, classic three waves. We marked it as an A or a C. C would mean this is complete of a 4 or a 2, right? Which means significantly higher. If it's an A, it would mean this is A, this is B, and we can go a lot lower. So remember, you can get a B flat, meaning this can go higher than this, okay? So keep that in mind. It can also be, if this is a major top, this can be the third wave developing. But we're getting in, I don't want to bore you with Elliott wave rules, but we're getting into this being invalidated here. 4 can't go into 2, basically. We had impulse. We exploded, right, through the Tenkan, the orange, and the pink. We got through the moving averages here, the 50s, right, with ease, really. Okay, and look where we closed was over the median. So we fully expect this to open higher come Sunday night. Just from the markets tend to keep going the same way. I think it's roughly 85% of the time, whatever it does on Friday to Monday. Now with all this pajama trading being so big, you can kind of bring that Monday to Sunday. Doesn't mean it's going to continue on Monday. That's just your initial move. Okay, so moving into the weekly, and you have your levels there, and then we've written down there so you can go through. I would suggest reading this document, if you're not reading it now while you're listening to this podcast, to go through it. Keep it handy for big levels through the week. These weekly and daily levels don't change much until a major thing happens, such as the virus a few years ago. Okay, so, and it goes through, we keep here as a record of the breakups so you understand where we're coming from. Markets are unpredictable, but in a predictable way, right? So in our weekly, this was the most telling reason why we took the action we did last Friday, and we're fortunate to benefit. And it's, again, what we talked about in Apple with the strips for the S&P, and I know Madavi took similar action on the Nasdaq, and I know Alex also similar on the S&P. So you can see different styles of trading, different minds, different backgrounds, etc. But the technical analysis is key, but also add in what suits your temperament, your financial ability, goals, all that sort of thing. Anyway, weekly, you can see the ABC very clear. You can see the Tenkan line, right? Right on again on the weekly median. You see that? See the explosiveness. Now, a big thing of a lot of our theories is when you retest, it isn't necessarily doing a double bottom. It's the things like Tenkan chase up where people are long at. So it adjusts for roles, for different things in the market, psychology and strength. So it's measuring strength. So this Tenkan is where we broke up here. And we had the false break. Right? This move was actually more powerful because we had a bit of a spit down here at the Cajun. Okay, moving right along. And feel free to ask us any questions on either on YouTube, on the website, or on Twitter. So we have a lot of avenues you can engage with us. So again, a constant reminder, just how isolated or how concentrated this movement is. Look at these numbers that make up nearly a quarter. Apple, Microsoft, Google, Amazon, Facebook. Okay, the Nasdaq itself. The bounce was a mirror image as we've been talking about as S&P. No surprise given that concentration, right? Not as strong as S&P this week. Same thing. Correction of where it broke up from, right? That's always a very big thing. Doesn't have to be a double bottom. And you want to be prepared. The key is be prepared. Most of these moves, the big moves, happen very quick. If you look back, if the stock market's up so and so. But don't just buy the BTFD thing of stocks. Don't just buy it just because it's down. Look at why it's down and where it's at. The Russell is the runt of the litter here. Look at that. Barely got out of bed. In fact, it's barely just over the cloud, and it's just inside this outer band, right? So this really needs to come to life. It actually hit the Cajun and was just thrown back. It was like throwing back a bad catch right into the sea there. You know, you wanted some salmon and you ended up with some catfish. Okay, the semiconductors, big indicator, and we saw they were up again. And so, been on a nice tear. We've been watching this pennant evolve. I did the weekly here. You can go back to the daily to get that more ABC. But we just wanted to show how far it had come. What's interesting with this, it's not really giving a healthy correction. It never actually comes back quite enough. So at some point, that's going to be messy. If this rolls over, look at this negative divergence possibly developing. Meaning this is high, right? Look at this. This is much lower than this is much higher. Hasn't rolled over yet, but you need to be aware of that. And what other indicators? So then you go stock specific on semiconductors, probably now more than ever because of the chip shortage. Some companies are benefiting from it, some aren't. And just before we came on, I was reading through the semiconductor reports, global semiconductor sales, and Samsung has actually overtaken Intel as the biggest in the world. And so Intel's now number 3, and there's the new number 3. It's on the site somewhere. It's on. I forget who's putting it on. But interesting development. Again, Intel has lagged again. A good example there. To NVDA was the darling. Someone was comparing that to Apple. Well, not the way we look at it. Yes, it's hot, but the setups we saw were a lot to do with the lagging stock that it was getting caught up through, I think we mentioned last week, from delta chasing where you got to keep your delta up and it was a lower vol. All that's explained separately. So I encourage you to look at that. So NVIDIA coming down hard. There was also specific news on that of the takeover they're doing being challenged, not just by the EU, but also by the United States. So if you're a stock trader, know your stock. You know, I'm more an industry kind of guy. Not smart enough for that stuff. Apple, a little bit different. We like that purely because the financial market setup, the derivative setup of it with options and stocks, it's kind of at the right value. Very heavily traded by big people, meaning the market makers stay in, so the depth is there. I tend to shy away from instruments, be they stocks or commodities or currencies that don't have high liquidity. Kind of been around too long, I guess, for that. So you can see our report on that. We don't need to spend too much time on that because we've done a lot of work on it on separate things. Amazon, kind of the weaker of them. They got a lot of their own issues. Sadly, we saw with these terrible news of these tornadoes hitting the States, over 100 dead, and it'll be interesting tomorrow. Amazon itself had a warehouse. I think 6 died. It's getting a lot of negative press because Jeff Bezos, who's not the CEO anymore, but is a Blue Origin, took off with another rocket launch. I mean, from what I see, these aren't going too high in space. But anyway, that garnered negative reaction by the press. So, what does this do? The relevance being, look how many times on a weekly it keeps coming back, and this 50 again held, but didn't take off like Amazon. I mean, like Apple or even NVDA there that we just looked at. Here's the sad tale of the very high flyer, fast money kind of trade. A lot of retailers are traded to this. A lot of people kept buying the dip on the pullback because they took this from all that pump money when people are sitting at home as being a real market, right? This got dramatically overvalued, and because they flocked into Cathie Wood's vehicle, and it was an ETF, she had no choice but had to buy, right? Unfortunately for her, it wasn't a closed fund, so it became self-fulfilling, and then self-fulfilling on the downside, right? So we talked about this over the last few weeks. Well, firstly, let me touch on that divergence here. See how this is lower, that's higher? So that put the warning on. But we had the big pennant that failed, and we came up and retested that 50, and we've sold off. So this index is made off a lot of those things, a lot of those stocks that are being sold off for tax or for disappointment, different valuation. I'm not quite sold on the whole growth thing versus interest rates, because interest rates really haven't gone up too much. That becomes an issue when credit is not available, liquidity is not available. The taper is really just, it's not as if they're not still buying assets, right? So they're still doing that. We work out when that tapers off. So a lot of this stuff, and that's why we spend a lot of time on Elliott Wave and things, is crowd and how the herd reacts, right? It was being overvalued for a long time, and it kept going. And a lot of this is options and short selling and algorithms. They all factor into it. So know your levels. That's why you get a good visual out of it. We had some big earnings last week. Sentinel got sold off hard. Toll Brothers hit record highs. The housing people. UPAF, I see there, and Stitch Fitch got wrecked. Again, same sort of story, right? GameStop was a big one that got sold off. That's a meme stock that came out with bigger losses. So that's going to affect that genre. They tend to have leadership. Broadcom had a big week. Costco always seems to do well. Whatever the situation, just a very, they seem that they're a printing machine since everyone decided they had to load up on everything. Lululemon was another one in that category. Chewy, another one that was sold off. Okay, this week we have a couple of things we have here to watch. Regeneron has an investor day, as does Campbell Soup and Eli Lilly. Lanier has earnings on Wednesday. No doubt there's going to be a lot of expectations on that after Toll Brothers hitting record highs. We have a couple here that are good garners for the economy, different aspects of it. FedEx, of course, being a big part of retail and everything else. How is that being affected by gasoline prices, etc.? Then we have some techs in JBill and Adobe and Accenture. Can give us a good indication of what's going on in the world. Then on Friday we have Darden Restaurants, which I believe is Olive Garden and a few people like that. So that's our quick look at stock markets. The bond markets I will touch on just a tad here because of what's going on, and we have a Fed meeting out this week. You can see what happened here, and you can see the curve shifting. This is the 10-year. Now, this 50, we've been holding that most of the time and bouncing around it, okay, as we're compressing. So the 3-month ended the week at just under 0.5%. So these are very low rates. Let's be honest about it, right? Traditionally, through history and with all this money, something should be happening. So it shouldn't be how is it a surprise? Inflation is what it's at. But you can see if you just look at the curve, right? So we went up 7 BPs in the 2-year, up 12 in the 5-year, up 14 in the 10. So you can see what's happening on the curve, right? Look at what happened out the long end. We had a 30-year, I think it was this week, or was it the week before? I think it was this week. Very disappointing. We gave that a D-. Well, I'm not saying me specifically, the fixed interest desks around the place. So that went up 21 basis points. So, and just think what that means, putting your money out there for 30 years. Mortgage-backed securities, just 8. And then we have, we'll focus on that. I don't want to spend too much on this podcast on this. Go to your site, look at the mortgage rate market, what the Fed Reserve is doing. Very important to look at that this week with Fed and also the other central banks. We have the European bond markets, and then, as you can see, a big surge there in yields. Not surprising given in the risk-off area, things like the Greek. A lot of these economies have never really recovered if we go back all the way to the pigs and all that. And finally, I want to bring us down. Let's go back up here so we can find it without dragging through it. Let's look at foreign exchange. I wanted to touch and you've got all your major currencies there. But what I wanted to touch on, the dollar was pretty well little changed at the end of it. But individually, look at the different currencies. They all react differently to the situation. I wanted to drag you down we talked about the Turkish lira. Just look at that. That is just totally collapsed with what's going on there. Inflation out of control. Obviously, a lot of dissension politically. Erdogan, I don't want to say too much, but fairly obvious what's going on there. Elliott wave-wise, it's obviously a 5 or a 3 of some degree. It just keeps going directionally one way. So that's it. Any questions? Bitcoin there, that's another one just before we go. Look at that dramatic collapse. That was 26% on one day last weekend. Technically, it does trade very well because that's kind of what's running it. Machines, which are mainly mathematically based, right? And amazing that spike came all the way down to its 50 and the cloud, and we saw this action. But I have never actually done a trade on this personally, but good idea to watch at the higher speculative end of it. All the people, and then there's also obviously the conspiracy end, for want of a better word, the Great Reset, the end of money, etc., governments. We could go on and on. So jump on. You got your calendars on there of what's going on this week, the earnings, IPOs, etc. Feel free to pass judgment, I guess, on other things you'd like to see or would not like to see, or us to elaborate on. Thank you for all the kind comments. Those that are following us, so make sure you subscribe to the YouTube channel, and we do in most cases, so far it's working out. We do a pre-game podcast early in the morning. What we're seeing happened overnight. A quick overview, pretty much of the futures in the S&P, natural gas and oil, our main things. And if a couple of times we've seen a few live things we wanted to bring you to attention, like Friday was like a classic pattern. Couldn't resist not sharing it. Thank you again. Have a great evening and get yourself prepared for hopefully a good day. Remember, it's getting thinner and thinner, less and less liquidity as banks and investment houses close up shop for Christmas and the end of the year. Good night and see you tomorrow.